All right. Hey, guys. Thanks for tuning in to Elliott Wave Made Simple. We are going to take a look at crude oil on the 4-hour chart through the lens of Elliott wave theory. Let's dive into the analysis. All right. So here we are looking at gold in the 4-hour. Now, I'm not going to go back in time, but this snapshot, if you're an Elliott wave guy, you know exactly what you're looking at. This is the top of a wave 3. We were looking for a 3-wave pullback in its entirety to complete a wave 4, and it got a little tricky. Price came down, didn't quite make it far enough. So this bounce also was overlapping, looking corrective still. Price kept coming down, so it meets the minimum requirement of a wave 4 here by the 236, which comes in at 23.15. Also, the structure of this, you could argue, is 3 waves. It could also be 5 waves down. Then we had a B wave, and no matter how I measured this, I couldn't come up with standard impulse. See, the thing is with Elliott wave, you're always looking for that 5-wave impulse because the structure of price is really what gives Elliott wave its power. If you understand the wave characteristics of the many different waves that Elliott wave helps you identify, then you are really getting good context regarding price due to the structure of price. So, for example, if this were really the low, the bottom, then this would have measured somewhere in here that would have been a more characteristic wave 3, and it would have measured as such, but it did not. No matter how I measured this, I could not come up with a standard impulse. So I started thinking B wave. When it broke the high here, I'm thinking, oh man, it's a B wave that, because it can be a B wave that breaks the high of the previous high. Now, I'm sure a lot of folks got bulled up on this move right here because, I mean, it's just straight vertical. That's another thing. I've seen enough B waves to know if the structure is irregular, if it's extending and beyond any of the internal subwaves where you think it should, then I start thinking maybe it's a B wave. Would this be the position of a B wave? Yes. Why? Well, another clue is if this really were going to be all of wave 4, due to the context, which I'm not getting into in this video because I'm going to keep this video brief, this is not enough time off the clock to be a completed wave 4 due to the amount of time that this wave 3 took. It took a very long time. You can go back, look at a weekly chart and look for yourself. So I wasn't falling for the banana in the tailpipe thinking this was all a wave 4. The structure, it didn't look right. The amount of time that it took didn't look right. And how deep it was didn't look right. Now, after this B wave, look at the reaction. I mean, that's a wild reaction. So I'm starting to think, well, that's probably a wave 3 because a C wave is typically composed of 5 waves, especially in the standard, call it a zigzag correction or flat correction in Elliott wave speak. The C wave is very likely going to be made of 5 waves. So I'm thinking of this as 1, 2, 3, and then a kind of a triangle-y thing for wave 4, and then wave 5. To me, that makes sense. Nice reaction, but overlapping. Came back down to the same level, tagged it again. So now I haven't moved. I just realized I haven't moved this label over. But if that is the low, then this is going to be C of 4. This view also, I have some shortcomings about this view based on the structure even of this C wave. Having said that, the move up off of that low looks a little more encouraging for this to be potentially working on 5 up. So now I'm going to drop down to the 1 hour chart. Now that, okay, just take a snapshot of this in your mind. That may be the top of wave 3. This is an ABC correction. Now this looks a little better in terms of how much time it burned off the clock to this level. Did it get deeper? No, I would have preferred that it had come down deeper to where my cute little bearish teddy bear is. Also a C wave, these extensions down here are very reasonable for a C wave. So it really just is barely getting past the minimum requirement for that C wave. And it's also barely in the minimum requirement for where you would think a wave 4 would terminate. So now the clue that I'm really looking at is the reaction off of this level does look impulsive. So, all right, so keep it in your mind, that snapshot of this. Now we're going to drill down to a lower time frame and look at the structure of the current move up off of that low. So here, looking at the 1 hour chart, the way I've put the measurements on here, if this is a 1-2, actually, I haven't put any labels on this. So let's just go ahead and put on what this might be. 5 up for wave 1, a 3 wave move, also a flat, more or less. It didn't go very deep, and it burned a lot of time off the clock. And this is another thing that I've learned from watching Elliott wave, which is really cool. That wave 2 that I just put on there, if that thing had come down deeper, it would have been less time off the clock. But because it was fairly shallow, it made up for the shallowness by burning more time off the clock. Now, that's something I've seen over and over again on different time frames, different scales. Just something to keep in the back of your mind. All right, so the standard normal target, very common for a wave 3, would be the 1-6-1-8, which, as you know, is the golden ratio. So the way this measures right now in gold, we are right at the 1-6-1-8. And does this look like a wave 3? I will say yes. And also, as you know, structure of price is fractal, which just means self-similar at scale. So inside of a wave can be another wave that has a similar structure, regardless of the scale. Now, it's going to be some variance for sure. It's almost never exactly the same, but it can be self-similar at scale. So what I mean by that is this wave 3 very much could be composed of 5 waves, 1, 2, 3, 4, 5. And I didn't measure those, but I can just see from looking at it, just as this burned off a lot of time off the clock with a shallow overlapping sideways move, this wave 4 did something very similar, burned a lot of time off the clock going sideways in an overlapping manner, moving in 3s for a potential wave 4. So that makes sense to me. So how are we going to know? Here's what we're going to do right now. We're going to measure. Now, I don't know if that's topped or not, right? How does anybody know? Well, I'll know if it topped or not eventually, but right now it's too premature. But all I'm going to do is throw on some fibs. Let's just say that is indeed where it topped, just 2401, let's say. Okay. And the bottom of wave 2 is 2327.40. All right. Now, normally I get painstaking and I put these levels exactly. I mean, I put the fib tool rather on the penny, but just for the spirit of time, I'm not going to do that. Now I've got a bunch of templates saved. I've got one that is a wave 4. And so a wave 4, just my beginner first crack at a wave 4, I always look at the 236 to the 382. Quite often, price can extend down between the 382 and the 50%. But by the time it starts developing, if it is going to develop as a wave 4, I'm going to be able to take some measurements and come up with a more exacting idea of where the wave 4 may catch support. But for right now, I'm just going to throw the 236 and the 382 on there, put the 4 below that. So if 2401 or wherever this exact, let's see where that exact top is actually. 2401.50. Isn't that something? So at the moment, it reversed. I mean, well, it didn't reverse. It stopped going up in that general region, 2401.50, 20 cents below where the 1618 is. Now, in and of itself, that doesn't mean a whole lot. It can go above it quite a bit and still be a wave 3. Sometimes it comes up a little shallow. I mean, a wave 3 could come up a lot shallow if it wanted to. But in this case, we are right there at the golden ratio. So this is what I'll be looking for, a retrace. And then look for one clue is to try to determine, has wave 4 terminated? Now, look, I'm getting ahead of myself here. I'm just kind of teaching a little bit here. One of the clues is a wave 5 should be composed of 5 waves. Remember how I was just saying price is self-similar at scale because it's fractal. I mean, that's the definition of fractal, self-similar at scale with some variance. So wave 1 should be composed of 5 waves. And I didn't even talk about this, but just eyeball it. Look, 1, 2, 3, 4, 5. Wave 2, and then another 1, 2, 3, 4, 5. This whole thing is wave 3. And then now we'll get, hopefully, a wave 4 without too much more upside directly. You can allow for some more upside, yes. Wave 3s can extend. This is perfect for it to terminate somewhere in this region and then catch support somewhere in here. Ideally, also above the 2373 100 fib, because that's another reasonable support level for a wave 4 of this degree. Okay, and then wave 5 will be composed of 5 waves. So in review, waves 1 should be composed of 5 waves. Wave 2 should be some combination of 3 waves. Wave 3 should be composed of 5 waves. Wave 4 is usually the most complex corrective wave. So that can be composed of 1 3-wave move, 2 3-wave moves, or even 3 3-wave moves. More on that later. And then wave 5 should be composed of 5 waves. So just as wave 1 over here is composed of 5 waves, once this bottoms, we're looking for a nano 5-wave move up and a 3-wave retrace. That would be similar to this idea. 5 up for wave 1, then a wave 2 retrace, 3, 4, 5. So basically this wave 5 is going to be, should be, a miniature version of the entire 5-wave structure. Now, let me take a pause right here and let you know, if you're watching this from YouTube and you've never seen this before, LA wave theory, it's not the easiest thing to learn. Maybe you're already confused, like, whoa, what is he talking about? It is complex, but just like a lot of things, the more complex something is, the more finely tuned it can be. I kind of think of it, if you've ever taken a picture, a high-def picture has way more pixels in it than a low-resolution picture. And as a result, you need more processing power to handle pictures that are high definition because you need more memory, you need more processing power to handle it. Same thing with film. So I view Elliott wave in a similar way. If you're going to use Elliott wave, it takes a lot more effort to learn it. There's a lot more details. There's a lot more things you have to keep in mind sort of simultaneously, which takes time to learn how to do that. So if you're watching this and you're confused, you're like, what is this guy talking about? That's perfectly okay. Now, if you are that way, just look at the numbers and just know the numbers on the chart imply just what you think they would. If wave 3 finishes, what comes after wave 3 is a wave 4. You can look at the chart, look at the zones. These are not exact levels, they are zones. So just if you can count to 5, you can follow Elliott wave theory. All right. I'm going to get into more of the sort of the teaching side eventually on this channel, but for right now, I'm just covering kind of quick and dirty analysis of a few instruments. All right. So what we really want to see now is this pullback. Now I have another thing that I use. Now this is speculative now because wave 4 hasn't even started, much less completed. But this is the kind of thing that I do, and then I adjust the measurements based on the subsequent price action. Right now, I don't have any price action for a wave 4 at all. It's just total bull city. We're still in wave 3 until it retraces more. I need more information. So one of the tools I use is a ratio, and I'm not going to talk too much about it, but I'm just going to put it on the chart, and wouldn't you know, boom, this box right here, you can see it's right exactly where I had this oval, which originally I put there without these measurements. I put that oval there quite a ways back based on this arrow. See how I have these other arrows on here? These represent areas of liquidity. Now look, I've also learned a few things about volume, and I've learned a few things about liquidity. So when you see candles like this, there's a little more to it than that, but this is a quick and dirty, moving in this manner, it's very likely that they're going to come back and grab that liquidity. It moved too far, too fast, they're going to come back for it. Same thing on this candle. So this move up here grabbed that liquidity. That's just one way of saying it. In Elliott wave speak, you can just call it a wave three, in a wave 3 of 3. But other guys talk about liquidity and volume, candles. So price came up and grabbed this liquidity off of that wave 3, and then the larger degree wave 3 came up and grabbed the remaining liquidity out of this candle here. There is another candle here, right in this area where there's just nothing in there. Might not look like much, but after you've been staring at charts as long as I have, you start to pay attention to certain things, and I pay attention to candles that are just sort of naked in free space like that. And I think it's really interesting that this ratio box, this Fibonacci level, lines up with that liquidity area. Now, once it comes back up to grab that liquidity, I like to put a checkbox in there just as a mental reminder of what happened. So I expect if this plays out as I've drawn it up, that I'll be putting a checkbox in there in the weeks ahead. All right, so that's it. This is the target. Just call a minimum target. Okay, one last thing. I'm just curious where the 200 fib is probably not quite making it. Yeah. And based on where that wave 3 is and the ratio, which is measured of the entire height of wave 3, and I'm speculating where wave 4 may terminate. Once wave 4, okay, two things. I'm going to be able to dial in where wave 4 should terminate whenever this tops and starts moving lower. I'll be able to dial in. That's the first thing. Second thing is once wave 4 terminates and we get a nano 5 up, I'll adjust the tool for this ratio box and put it wherever the bottom of wave 4 is. And then that'll give us a more accurate zone. Like if wave 4 is really shallow, for example, then wave 5 can extend a little higher. And, you know, it wouldn't be unusual at all for gold to extend 2618. It's going to play with the fibs. It's all I can say. So until I get more price information, I'm just speculating. But I'm speculating from an educated, experienced point of view. But we don't have to speculate too much. I mean, these zones have been on my chart for a minute. This measurement has been on my chart. This zone I've been expecting. I've been waiting for price to get there, and it's there. I mean, not because of anything I'm doing. It's just I'm measuring things based on Elliott wave standards. So there you go. Save the chart. That's the deal. Now, look, if you're finding value in this video, go ahead and subscribe just so you'll continue to be notified when I make other videos. I'll be covering these same instruments that I do on the weekend. I'll do another video during the week, sometimes really short videos, just updating if there's significant movement in the price. And also, if you're new, feel free to make a comment and ask me a question or suggest another instrument you'd like to see analysis on. I'm not promising that I'll get to that, but I just want to know what you're thinking about. And thanks in advance for all that. All right, guys, thanks for watching. And let's see what happens this week with gold. Take good care now. Bye-bye.